Hi everyone, welcome back to Berich. As I said yesterday, we are changing and pivoting in Berich on the YouTube at least, trying to be more inclusive of companies and stocks outside of the shores of India. And I had spoken about Skechers and the opportunity which was in Skechers and how an arbitrage was there and how arbitrages present themselves in the market. And we as value investors should look for these opportunities. And if we do find these opportunities, you should try and make the most of them because they are very infrequent. And when they do appear, they can make a tiny sum of money if you're smart. In that same vein, or same effort, I should say, Shashwat had put up an article on his Substack, which he shared a few days back. If you have read it, then you know what we're going to be talking about. If you have not read it, I strongly suggest you pause this video, go read it. It's a very short, nice, sweet article, written quite crisply. Read it, and then come back and watch the rest of the video as he explains further on that same article what it's about. So, Shashwat, what is the gem which you have found for us?
Right. So the article which has been published recently on the Substack is about the Japanese company Marubeni. So Marubeni Corporation is a Japanese conglomerate. It's known as a Sogo Shosha, which is basically a huge multilateral trading company. The technical term for it is Sogo Shosha, which is a Japanese term used to refer to these huge conglomerates. So some of its peers are Mitsubishi, you have Sumitomo, you have Itochu. So you have quite a few of these companies in Japan. And they're large Berkshire Hathaway style companies with seemingly unrelated product lineups. For example, you have Duracell, and then you also have Dairy Queen, which is an ice cream company in the US. They also do insurance. So Berkshire Hathaway has its hands in multiple different avenues. So similarly, when we look at Marubeni has multiple different segments in which they operate. So the largest segment, of course, is their food segment, food and agriculture segment. So they do everything from producing the inputs for agriculture. So, for example, you have fertilizers, pesticides, and all those products. Then they also process the agricultural commodities, and they trade in agricultural commodities, and they process it, and they produce consumer facing products, and they trade in spices as well. So there's quite a bit that they do. They import coffee from Brazil. They're one of the largest coffee exporters in the world, that is Marubeni. And the main point here is that they have a lot of different things that they're doing. They produce aircraft parts, they manufacture ships, they do leasing for aircrafts and ships as well. They do mining and metallurgy. So there's quite a bit that they do. There's not a lot that Marubeni has not seen in terms of its operations. So recently they've acquired Sumitomo's pharmaceutical business in Japan. So they're trying to get into pharmaceutical products and healthcare products as well. I think they're the exclusive dealer for Tim Hortons coffee and Tim Hortons chains in ASEAN countries. So that's another thing they have going for them, which is under their belt. So these are some of the things that Marubeni does. And the company was actually established by Chube Ito in 1858. And it started off as actually a textile trading firm. So after World War II, during the occupation by the Allies, basically the US wanted to dismantle a lot of these industrial firms in Japan because they wanted to uh, basically reduce Japan's economic dominance. So what they did was they dismantled a lot of these firms, stating that they were allied with the Japanese cause of World War II. Of course, some of this information is true. I'm not denying that. But anyway, they were dismantled and then they re-emerged again in 1949. And ever since then, they haven't looked back much on their textile dominant past. And today they're doing quite a lot more and quite a lot of things differently from what they were doing back then. So this is the background of the company. So far, do you have any questions or do you have any comments on this?
No, just that adding further, they're almost 200 years old now.
Yeah. So they were founded in
Yeah,
1850.
yeah. That's one thing.
Yeah.
Other than that, you have really captured it very well.
So when we move on to what Berkshire Hathaway is doing, like why there's such a commotion about Marubeni. It's because since 2021 to now, 2019 to today, the company has gone from a market capitalization of 1 trillion yen to about 4 trillion yen. So that's a huge jump. And Berkshire Hathaway got their stake in Marubeni around 2020. And recently, they have announced that they're going to be increasing the stake up to 10% in not just Marubeni, but all the Sogo Shoshas. And they have done that. They uh, put their money where their mouth is. And they have made a killing on the Japanese companies because they raised capital at about 1% or 1.5% because Japan is burgeoning with capital savings and nowhere to put it. So Buffett took from one hand and invested it into Marubeni, Itochu, and these other companies, which are giving a dividend yield of about 4% on average. So he's pocketed the 3% as basically free cash, which he's put into his pocket. These are companies with conservative fiscal management. They're not going to disappear anytime soon. Or rather, if a company were to disappear, these would be the last standing companies. So these are some of the factors as to why Mr. Warren Buffett made that play back all those years ago. And today, even today, the company trades at a peak of close to around 8 the last time I checked. And the price to book value is about 1.09. It's trading per share at about 2,500 yen, Japanese yen. So the dividend yield that they're offering is also quite robust. Even today, if you buy Marubeni, you get about a 4% dividend yield, which is a pretty sizable one. And the main pull factor for Marubeni today is the fact that their free cash flow has compounded by 10% over the past 7 years, which is amazing, given a company that's operating in Japan and the Japanese growth rate being quite small. For this company to be, compounding their free cash flow at such a huge rate is something that's a marvel. And recently, they've reduced their debt to equity ratio, which has caused rating firms to upgrade their credit rating, and they've rated us as positive from stable. So there's possibly an upgrade in their rating in the future to be had. And if you look at the debt to equity, it's at a rate of 0.7, which is pretty nice for a company of this size in Japan, given Japan's cost of debt is actually quite lower than what we're used to in India. In India, you might be paying upwards of 10% for your interest on large loans. However, if you look at how much Marubeni is paying, they're paying around 3% as the higher estimate on what they've borrowed. So they have quite a good uh, rate which they're paying, and their return on invested capital is about 9%. So all in all, they're not destroying capital, is what one can see from what they've done so far. So given all of these factors, and given that after doing the DCF analysis, the discounted cash flow analysis, we basically see that if we assume a free cash flow growth rate of 5% year over year over the next decade, we take a terminal growth rate of 2%, which is roughly the growth rate of developed economies, and we take a discount rate of 8%, reflecting the fact that Marubeni is a large company. Their cost of financing is lower than other companies. So, given these estimates, you get a net present value of the company's cash flows per share of about 3,650 yen. Of course, this fluctuates up and down depending on what assumptions you take and what numbers you take. But the point that I'm trying to make here is that with Marubeni, your to get about an 8% return year on year, you would have to purchase the company at 3,650 Japanese yen. Today it's trading at 2,536. So you're buying it at a discount of the fair value which you would pay for a company like this. And also, if you take the 8% return, 4 of that percent, that is half of that return, comes purely through your dividend yield. Even if Marubeni doesn't appreciate much more than 4% year on year, their dividend yield alone is paying you the return that you expect it to be paying you. So, given all these factors, I think that it's definitely in the value range of purchasing. What do you think about this analysis, and what are your thoughts on
I
Marubeni?
would say you're very conservative in your calculation. I'm more generous. I would say instead of around 3,000 odd, what you were saying, I would say it's closer to 6,000. where,
Okay.
yeah, that's the other extreme what I'm sitting on. But one thing people should keep in mind, Madhubeni has been in deep discount for a very long time. Just because something is in deep discount and you buy it, it doesn't mean it'll suddenly market will wake up to it and it'll become value stock and you go become overvalued in a year's time, 5 years' time, 10 years' time. People should
Yeah.
remember the Japanese market was depressed for 40 years. So, yes, it is at value. The company is a fantastic company. It is spewing immense amount of free cash. And from moving from very volatile sectors like oil, metals, they've moved into, pivoted and moved away from that and moved into stable cash flow segments like agriculture, pharma, IT services. So they are growing and they're growing in the right direction. It's all good stuff. But if you do decide to enter the stock, like Warren Buffett buys something and never sells it, Madhubeni has to be that kind of an idea where you enter it and then you're ready to sit on it for a long time. The company is almost 200 years old, like we said. When this stock is going to become overvalued and you're going to see some mega bag returns, is very difficult to say. It is not like the one which we spoke yesterday, Skechers, where there was an arbitrage and there was a takeover and all that. Madhubeni is not in that basket. This is more like a tank, more than a rocket. It is solid, it is stable, and will keep chugging along, incrementally getting better and better. If you've seen over the last, what you call, 3, 4 years, that division between the intrinsic value and where the market is pricing, that gap is getting shorter and shorter if you track it over a period of time. But it still has a huge gap. There's a huge head, as they say. And like Shashwat says, it could be at 3,000 odd, or in a best case scenario like me, it could even be at 5,000, 6,000 odd, which is a very generous way of looking at it. So that keeping that in mind, if you are an investor, there's an opportunity here. You won't lose. And like Shashwat says, it will not get terribly bad, but it's not going to get amazingly well very fast. So as an investor, I would say you should keep that in mind.
Yeah, I would view it more as a way, more as the way we view something like ITC, which we viewed ITC before on our sister channels, that is MoneyPage and the other ones. So I view it as a commitment into an FD. You put it into a piggy bank and you reap the interest that you get on lending to them. Marubeni is one such company where they're so big that it's almost as if you're purchasing a little bit of Japan and USA. Given that half their market is the US, half their market is Japan, you're basically purchasing a little bit into each and you're purchasing it at a discount. And their financial state, at least as of now, looks fine. I can't comment on what Marubeni is going to do in the future. We'll have to
No,
see and we'll have to reassess. But as things stand today, as the management is talking today, I believe that I gel with the vision that they have for their company. And the vision, I will state it clearly, that they have for their company is that they want to maximize dividend payout. They want to keep dividend payout at 40%, a consistent 40%. They want to focus on free cash flow generation at all times. And they want to figure out how they can keep up their free cash flow in the positive digits, investing as little as possible to generate as much cash as possible. I think this is the way investing is done. And when we look at the strategy which they've come up with, they've basically said that they're going to do away with a lot of the cyclical businesses that they've been operating in, low margin businesses that they've been operating in. They're going to cut down on a lot of the early commodity productions and focus more on value addition and value added products, which is why they've acquired Sumitomo's pharmaceutical company. So their plan is to start generating more consumer facing products rather than producer face, that is B2B products. They want to focus more on B2C products. So that's
I,
their bottom line.
I agree. And like Shashwat says, it's interesting to do, you know, DCFs. It's interesting to look at discounted cash flow. Are you discounting at 4%, 10%, 8%? It's your personal choice. And what you feel instinctively is the right way to go about it. But at the end of the day, if you look at it purely in terms of qualitative instead of quantitative, it's the quality stock. It's a kind
Yeah.
of stock we are very fortunate that we're able to invest into it. If we were Indians, 10, 20 years ago, it would have been very difficult for us to even think of owning the stock sitting in India. Thanks to our country progressing the way it has, and our economy developing and maturing, and our government policies heading in this direction, we are given as Indians sitting here the opportunity to invest into a company like this. There are many companies which were at deep discounts, 20 years ago, which we are not able to even touch now, outside India, that is. But these are one of the few companies. And I feel it's one of the companies, if you do invest, your children and your grandchildren will be very happy that you had the foresight to look at this company and say, okay, I'll put some diamond nickels in it. Because even if you take the case of Warren Buffett, who's just recently stepped down from his leadership role in Berkshire Hathaway, his motivation is nothing else when he invests in these Japanese behemoths, because at this stage in his life, he's not trying to make a quick buck. He's not trying to turn some cash overnight or flip it. He's thinking about the future of Berkshire Hathaway and his investors 100 years from now. And that is the attitude you should have investing in these kind of Japanese companies. That
Yeah.
will be that's my.
Couldn't agree more.
So anyway, here we gave you some food for thought to explain to you why someone like Warren Buffett, why value investors around the world, including Shashwat and Anand, feel these Japanese companies are so tremendously undervalued and we should keep an eye on it.
Also, we should disclose that we own Marubeni. I think that's obvious from what we've said, but we own Marubeni. Yeah.
Yeah, we own shares in stocks. We don't own the company. We own
Yeah, we own
yeah, we
shares
own
of
slivers
Marubeni.
of it. Yeah, that disclaimer we should say. We are fans of the company. So that said, you have to see value in opportunities like this. Sometimes you'll get opportunities like I spoke yesterday, where you see an arbitrage and you can flip it and you can get out. Other times you will not see this arbitrage, but it's more of a value proposition. So thanks, guys. Thanks for watching Berich today. I hope you found some opportunities in these Japanese companies we're talking about. If you have any questions regarding this or any other Japanese stock or anything specific you would like us to talk about when it comes to American and Japanese stock, do comment down below. And me and Shashwat will try and pick it up and talk about that and discuss it further. Other than that, nothing else more to say. And if you're looking for something Indian specific, catch me on Instagram on the group. There, I'm talking about Indian specific stocks. Like today, I'm going to be talking probably about Trent over there and why I think Trent is still a great value buy. Thanks for watching. Be rich as always. Wishing you a wonderful evening. Nothing else more to say other than good night.